Okay, what's up everyone? How are you doing? Okay, so they arrived later from the airport and that gives us the opportunity to go live over here and check what happened on the chart. Now I literally just finished I had other stuff to do, of course, and then eventually I showered, got ready, and I was like, I'm gonna be ready at 7. So here I am. I was like kind of ready at 7. I grab my phone, and what do I see? I see that they took a later train than expected, and I basically ran upstairs, put on the live stream, and then I only had my pants on. I ran upstairs, put on the live stream, put on the timer, quickly put on a top and everything, and finishing the button on my shirt. And now we're finished. So here we are, spending some time with all you all, for a bit, and checking some of the waves, of course, and do chatting, because I didn't expect to go live, but of course I have some thoughts about the current price action, which I'll share with you. And after that, we can go into chatting mode till, well, they basically arrive. And of course, I left my phone downstairs because of the hurry, but that doesn't matter because I know the time they arrive. So, and if you have no idea what I'm talking about, tonight, friends from overseas, America, are coming here. It's a stepsister of my fiance and her boyfriend. And it just so happens, by the way, that her boyfriend is a trader as well. Very, very different style than I have. And he does stocks, and he looks for like these very unknown, rare, small little stocks that can pump for a big, I don't know how many percent. So I've never met him. First time. I look forward to speaking to him. We had a little conversation on Instagram. And of course, if I get some good info, you guys are gonna be the first one to know it, right? That's how we do. So let's see what kind of information I can get from him, no? So yeah, they're coming overseas. They'll be here for the weekend. Tomorrow is my birthday party that my fiance organized, so I'm not sure how much content I can make. They are sleeping with us for 2 nights as well, so it might be a very busy weekend. I'll try to pump a bit of content here and there, but it's gonna be birthday tomorrow, at least a birthday party. My birthday was on Sunday last week, so tomorrow birthday party, and then Sunday we're going to Amsterdam because we want to show them around a little bit in the Netherlands and do some stuff. So very, very, very busy weekend ahead. So the content will be on a bit of a lower level, but next weekend there are no plans yet, so should be good. Anyway, how are you doing? Is his name Jordan Belfort? Shh. Don't tell everyone, man. Don't tell everyone. He's the wolf. He's the wolf himself. By the way, talking about him, where is the... Yeah. Hey. There we go, no? I read the book. But this, of course, is about sales, right? Communication. Which is interesting. Very nice. Okay. So, very high. There we go. Got hand cream. I don't know. I found it in my bag. You never know what you can use it for. So, let's put this on. Say a little hi to chat, right? And then get the show going. No, so. Horizon tag, that's an unfortunate start, but what's up, mate? How you doing today? You're first again. That's the second time in a row. Watty, hello. Floaty is here. By the way, sorry if you got the first notification and the stream was cancelled because my title was wrong. It was still the gold stream title, Friday feedback. That's today. I give feedback on other people's charts. So yeah, I had to restart the stream. Abdul Karim Abunaji, hello, brother. How are you? I'm doing very fine. It's been an interesting day, I should say. Backtesting CVD, that's what you're doing after the gold stream. That's good, smart boy. But that's how you do it. That's how you learn. Backtest the tools, right? Gather statistics. Get yourself an Excel sheet, make a statement, yes, no, total, and the win percentage. Grab those statistics, right? It will give you confidence. Shorting Bitcoin. Well, currently I am, but I mean, my stop loss is already break even. So you know, I don't care what's gonna happen. But my entry was not at the lows, guys. Okay, so don't like be like, oh, you short. You know, you need a plan, you need a strategy, you need a solid. I didn't get wicked over here as well, but don't FOMO, YOLO, or catch an eyes. Right? That's not how we do. We're gonna talk about the price action as well and the expectations from a Elliott Wave point of view. Right? My trading strategy is actually, funny enough, not Elliott Waves. It has some Elliott Wave elements inside of my trading strategy, but there's a lot of different things I look at. There's 9 boxes I have to tick before I enter a trade. Whistle. Nice music, Mr. Koenz. What's up, man? What's up? But yeah, well, I answered your question. Ooh, Card Crypto, yo, how you doing? Penny stocks, yeah. Long as you live, yeah. Man, I'm 31. QZ World, what's up? How you doing? Bentham Baas. Kunnen ook gewoon Nederlands praten, weet je. Heeft niemand eraan behalve wij. Kamran Parizar, what's up? How you doing? Softsport, greetings, good evening. Farshad Farouk, Samith is there as well. Candy Daddy, oh, there he is. So Candle Daddy, he got into the comments, he said Litty with like all these emotes, the same ones. So I said Bitty. And then he said, I don't know, something else with Itty. I remember. I know. Lucas Alta, I went long at 69K, short at 15K. Now that is the way to trade, right? Happy Friday. Thank you. Appreciate it. Okay, guys, let's have a look at the chart, right? Shall we? Let's have a look at the chart. I'm going to move you, chat. I'm going to move you to my other screen in the corner of my eye so that I can keep an eye on what's happening. And yeah, let's cover the chart, right? And then when we engage with one another, I'll be putting you guys on the screen again, right? So, okay. Now, as you can see, there is not much Elliott Waves on my screen. There is actually just a simple channel on my screen. And I also had a volume profile. Volume. No, I actually removed the volume profile, I think. Yeah. And I also had a volume profile on earlier over here. Point of control is always interesting to keep an eye on. But most importantly, I had this channel. Let's remove this. And the target's gone. So I had this channel over here, pulled from the high of the order block, right? Press shift, so it's horizontal. And then while you press shift, I dragged it to the high over here. Very clear channel, right? And look, the weekend is approaching. If we don't get a big move in the upcoming 2 hours and 48 minutes, I expect a weekend range. And because that's when New York closes in 2 hours and 48 minutes, the New York market closes, and, you know, weekend volume. Weekends, based on probabilities, tend to be ranging structures. So with those probabilities in mind, if we don't get a big move in the upcoming 2 hours and 45 minutes, or 42, 48, whatever, you can expect a weekend range, right? And ranges are interesting because, you know, trade the range until it breaks is always a famous quote, because Bitcoin is ranging 80% of the time. And this is simply a channel that I have on my chart here, which, you know, could be the potential range for the weekend. And yeah, you could just see something like this, take the highs and you know, all that good stuff. So so what happened, right? In the previous stream, we went over some higher time frame stuff. Let's now first start, and local also. But let's now start with the more local stuff first, right? That's probably what you're most curious about as well. So exactly, little bitty. What's up, Sergio? How you doing? Let's hit Bitcoin. Exactly. Teach us about the waves. So, look, there were two. There's still like there were two options. Now there's one option for the bulls, right? So one option was a one very long two, which is a running flat, A B, C, where C on my chart didn't take the lows, which means it's a running flat. On some other charts, it did take the lows. But then you have a 1, 2, and then you're going to be looking for 3, 4, 5, right? The alternative was 1, 2, 3, 4, 5. Just counting, we don't have to go in detail. Like you're looking for 5 wave moves. This is a high impulse move to the upside. So you want to see for the bullish side a 4, at least a new high as a 5, before then a corrective structure. So a couple of things here are interesting with this most recent move to the upside. First of all, the volume at the moment is in the high, which for the bulls is not what you want to see, because you want to have a wave 4, a wave 5, and then wave 5 on lower volume. So a higher high on lower volume. That's what you're going to be looking for. For the bears, you want to see price moving down. Preferably, you want to see price moving down impulsively. If we look at the higher time frame scenarios, right, where we're still looking for example, the zigzag in the big wave Y double zigzag scenario for lower prices, at least 24/7K double bottom to be hit, if not lower. Bybit wicked all the way to 23.6K, which, you know, usually you fill those wicks as well. There's a double bottom at 24/7, the wick till 23.6. Like 23.6 would be a minimum target. Like my first support is 22K area. So but the question, of course, is this then the high and we go down? Now, then we look for impulsive structures. And that is, at the moment, not really what we're seeing yet. But and I'll go over why. But first, the bullish scenario, which got invalidated. So if we have over here, that is one of the two alternatives I just shared. If this like was a 1-2 scenario, and we take a fib from this low to this high, we toggle on the 0.5, where is it over here, which is the orange line at the bottom. You can see the 618 has been tagged. Candles closed below the 05, which for me invalidates this particular impulse. And then a 1, 2, 3. We had no 4, we had no 5. 4 went too deep, invalidating this as an impulse, right? 1, 2, 3, 4, 5. However, we take a fib from over here to the high, and then you'll see we actually tagged the 05. So now price hit the 0.5, right? It did not break it. We didn't yet reach the 618. It is, however, a very awkward impulsive structure. If this is your wave 1, which by itself, by the way, is already an awkward impulse over here, because wave 4 went to the golden pocket, very rare. So I don't like this to be a wave 4 on the lower time frames over here. I would prefer then a 1, 2, 3, 4, 5, and this ending instead of a 1, 2, 3, 4, 5. Also, this 5 is 3 waves. It's very, very messed up. So, oops, drag it to the right. So then you have 1, 2, 3, 4, 5. So what I still don't like in this scenario is that the volume is in the high, because even in a wave 3, preferably, you're going to be you want to count 5 wave structures. Inside the impulses, a 1, 3, a 5, you want to count 5 individual waves. So on the 15, where we are now, 15 minute, I actually want to be able to count 5 wave structures in this move if this is a wave 3. So how can we count 5 waves here? Well, only if this is a 1, 2, this is your 3, this is then your 4-ish, right? And then you have over here a 1, 2, 3, 4, 5 type of move. So now your wave 5 is extended. If a wave 5 is extended, it tends to have the highest volume. So you can end on high volume, but even a wave 5 has a 1, 2, 3, 4, 5, where preferably wave 3 has the highest volume. But as you can see, if this is your little 4 and this is your 5, then over here, wave 5 has the highest volume, which is not preferred, lowering the probabilities that what we're looking at the moment here is an impulsive structure, increasing the probabilities that we are looking at a corrective structure, meaning probabilities increase that we will see new lows. Now that doesn't mean we do this, okay? There's always those people that are like, oh, we go down 10K next, right? It's waves, right? Because now let's talk about the bearish scenario where this is the high and we move towards the downside. Let's check the probabilities of this being the high and us moving now to lower prices, right? Again, we have 2 hours and 40 minutes left for me personally for the market to have a big move if it wants to show us a big move, right? If it doesn't do it in this time, I expect a weekend range. So either I expect a range here, or we expect a range in the more bearish scenario at lower prices, right? So let's now see, can we look for impulses here? Let me remove the volume, right? Okay, we go to the, no, this is fine. So over here, this was quite a sharp move to the upside, right? Quite a sharp move. Could be a wave like C or an ABC, zigzag, WXY, right? 1, 2, 3, correction, 1, 2, 3, all possibilities. Most important with this move over here was, besides bearish CVD divergences, which I'll show in a second, again, in the high, the highest volume. Now, I'm not sure how many people know about like volume and Elliott waves, but it's very important to use volume with Elliott waves. You don't have to use the trading view volume over here. I mean, that's what I use. Keep it simple. You can also use order flow, right? But volume is very, very important in Elliott waves because in impulses, you want to see a 3, 4, 5, 5 on lower volume, all right? As mentioned. So over here, again, high volume in the high, bearish CVD divergences. The moment you start moving towards the downside here, that is like an invalidation of a continuation for an impulse, reaching like going below the 0.5 fib as well, and more bearish CVD divergences locally. Probability is really increasing to take the lows here and moving to the downside. So based on this and a bit of a move down, you could be like, hey, probabilities are high from an Elliott wave perspective, as well as in combination with CVD, that we are going to see price moving to the downside to at least take the lows over here. And the reason why, let me remove the channel as it's now actually obstructing my view. And the reason why these lows, and actually it's a single low because this low is lower than that one, so it's not a double bottom. But the reason this low was so interesting is because we had bearish CVD divergences between this high and this high, right? Lower high on price, higher high on the CVD, which you can see over here. Very, very big, right? Lower high on price, higher high on the yellow line. So you can see much higher. Bearish CVD divergence. Now, initially, these type of extreme CVD divergences could be leading divergences as well. So from an Elliott wave point of view, in combination with CVD, preferably you want to see price moving down a little bit, that like low enough for an impulse to be invalidated, which usually is the 0.5 for then a potential 4. If you're looking for like a 1, 2, and then 3, 4, 5. Volume was high here. And this is the trick, right? Because the volume here is highest, you want to see a 4 and a 5, which makes life easy because the 4 max target is the 0.5 fib. So what you do is if you have over here a 1, 2, 3, 4, 5 wave, a bit of like a diagonal structure, if that's what you're looking for, and this is your wave 2, you pull a fib from the low of 2 to the high of that move, right? Because it has the highest volume. But we want to see then a 1, 2, part of a 3, but we want to see 4 and 5s. So going below the 0.5, closing below the 0.5 invalidates the impulsive structure, and then in combination with the bigger bearish CVD divergences is a very attractive short position, no? So, and then we look for downside, of course. No? So yeah, that's a bit of Elliott wave, like why it was interesting to keep an eye on this and why it's so interesting to have then a potential short in that area if you use Elliott wave knowledge, because you can trade Elliott waves, right? Now the more bearish scenario, if we look for impulses to the downside, quick question, because this is important. It has to do with what I'm talking about now. From Abdul Karam Abunaji. What's the difference between divergence on RSI and that you called CVD. RSI is a momentum indicator, right? CVD shows market buys and market sells. It shows real time what is happening. It's not based on the momentum. It's based on real time information, market orders, market sellers, market buyers. And for me personally, I don't use RSI. I only use CVD. It's the only indicator, if you call it indicator, I suppose, it's the only one that I use personally. I don't use RSI because for me, in my way of trading, RSI is inferior to CVD. Of course, I know many people using Elliott Waves with RSI, which works very nicely for them. I prefer to use CVD, but that's up for like taste, right? Because anything can work. Any strategy should be respected. If you want to know more about CVD divergences, by the way, you got to go to my channel, look for like CVD or the home screen page, and you'll find the CVD explanation video there. So that comes in very handy. And finally, if you want to really get the hang of CVD, you have a one-pager. You can just download it in Discord, in the Good to Know channel, and then here's the video as well. Oh, you can't actually see it. At the bottom, it says click here with a YouTube logo, so you can wait. There it is. Okay, you get it. So, what's this? How the day... Oh yeah, I wanted to use how the day rolls in Discord, but I wasn't sure if that's correct English. So I tested it on Google. I didn't use it. How the day rolls, like how it moves for, I don't know. Anyway, for the bearish scenario, if this is the high and we're looking for a move to the downside impulsively, then we want to see impulsive structures. Now, I kept my eye on this structure over here. What's interesting here is we have then, if we look for an impulsive structure, we have two options, right? Officially 3, but the third is very rare. First of all, a regular impulse. 1, 2, 3, 4, 5. Well, we don't have that here. Next structure is a contracting diagonal. Potentially. More about that in a second. Third structure, expanding diagonal, right? And an expanding diagonal would then be like, you know, like this, you know, expanding structures. Now for the Elliott Wave is here, you might already know what I'm now, you know, going to be aiming for. If we look for a diagonal, leading diagonal, those can be all 3 waves or 5, 3, 5, 3, 5. Over here, can this be then a 3 correction, 3 correction, 3? No, because we didn't get another low. All of the waves have to be zigzags. This could have been a zigzag correction, maybe some sort of zigzag correction, and no, we didn't get it. And this one went too high, invalidates the diagonal. So then, okay, 5, 3, 5, 3, 5, but that's very awkward. And wave 2 and 4 in a diagonal have to be zigzags, preferably. It's very, very, very rare to have anything else than a zigzag in a 2 and 4 of a diagonal. So that also doesn't really work, meaning that the probabilities over here in this section are higher that it's a corrective structure and not an impulsive structure. We don't have to always count each wave perfectly. We don't need to know if this is a WXY, ABC, you know, whatever other corrective like those are WXYZ, you know. Just by using some of the knowledge of Elliott Waves, right? Some of the targets, we make life easy. Hey, we're looking for an impulse down because higher time frame, looking for impulses down. It's very difficult to count this as an impulsive structure. It's not an impulse, regular impulse. It's, you know, expanding diagonal. Yeah, doesn't like very rare, first of all, and an expanding diagonal, even in a 3, 3, 3, 3, you never got another low. If this is 1, 2, 3, 4, 5, no, well, this 5 didn't take the low of 3. And if this is your 5 here, yes, you did take the low, but you know, this is not a zigzag. And also in an expanding diagonal, you want a 5, 3, 5, and then have a, so it's messy, right? Higher probability that we'll go to the high time frame in a second, Jay. I will start now on the lower time frame and then build my way up. Because yesterday we covered a lot of the high time frame stuff. So Therefore, probabilities here are higher. This is corrective. And if you know that the probabilities here are higher, it's corrective, then the probabilities for the weekend are higher, that we are going to be ranging in the area where price is at the moment. And that is why earlier, just now, I don't know how much Control Z I have to press, but that is why just now I had the channel on my chart. Actually, let me pull the channel just to show people. Channel from this high, press shift, right? Look, it goes straight, shift, and then move it to the upside. However, there's always an however. As you know, I love using CVD. And for me, CVD shows information about the waves that might form, right? So if we go to CVD, first of all, massive bearish CVDs at the high, lower high price, higher high CVD, which can hint, like if you take the low over here, it can go quite like, you know, big bearish CVD. If you then take the low, it could have gone very deep. We did have high volume, but we found support on the support area that I have shown yesterday, which I don't know if I have the full, oh here, micro, right? So we're now literally on top of support, right? High, so here resistance, 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 now support. Very easy, right? Just a simple support resistance flip. As you can see, we're on top of the white box. So let's look at CVD more locally, and then we go to the higher time frame. Let me zoom out because this is also important. Let me actually get the screenshot so I can show people. It's been a busy day. There we go. This is the chart, right? Chart. This is the same piece of price action. This is the recent range here, right? So what do we see? The first red line here, the lower one, lower high price, higher high CVD already played out. So this lower CVD line, the red one already played out, price moved down, took the low, played out, neutralized. Now when price moved down, what did we see? Bullish CVD divergences here. On the left to the right. Target is taking the high. Is it a CVD divergence? Yes. Is it my favorite type of of a divergence? No, for two reasons. So I prefer to see bullish CVD divergences on the right side of a new high or a new low. So can this be a valid CVD divergence? Yes, absolutely, right? But over here we have, yes, higher low and then a lower low as just shown over here in green. But this lower low is actually a second divergence. So over here we have a higher low in price, lower low on the CVD, but this little wick down here, that was the first divergence with these lows. So you had a higher low in price, lower low on the CVD. First divergence didn't yet play out though, at least you got that with. And this is like the second divergence. So the first divergence didn't yet play out. Okay, right? So could this play out? Yes, but preferably I like to see bullish CVD on the right side of the new high or the new low. Now if we look more locally, same problem here. From the high, a second CVD with the pump. Lower high on price, and again a higher high. You can see the yellow chart, right? Higher high on Bitcoin. Lower high on price, still above this pivot. Higher high on CVD. Bearish CVD divergence, but this is also a second CVD. And the thing with second CVDs is that the probabilities are lower of these playing out. Let me actually put on some lights because you won't be able to see me if it continues like this. So therefore, after the move that we see here, I'm actually mainly focused using CVD on the right side of this newest low and the high. So I want to know what's going on over here. That's most important to me at the moment. I can't really use the other CVDs as shown here because we have a second bullish, yes, or a second bearish here, lowering probabilities. We have a big bullish here, right? You could argue it's the first one because this little pivot here didn't yet play out. Higher low on price, lower low on the CVD. It didn't take this high, so it didn't play out yet. So, I mean, technically it's then the green one here is a first CVD, which would then probability-wise be a higher probability, but this one is with an in-between low here, not the actual low, this one. So yes, you have a CVD, but you have a CVD with these lows, not with the actual low, which I don't really like. And also, I want to look on the right side of a new high or a new low, what's happening. That is for me much more interesting. Now, when we moved to the downside here, I was keeping an eye on the 1 minute, updating the people, and first of all, bearish CVD, very, very locally. Lower high on price, higher high on the CVD, bearish CVD, moved down, took the low, played out. Then, and that's what's interesting, this happened. Oh, I'm not sure if you can, wait. I'm not sure if you can see that clearly. Let me move, was it here? No, that's too early. That was here. So the bearish one played out. The second one over here, the bigger red line, was a second CVD, lower probabilities. But the first CVDs were the green ones here. Green candles, but CVD in yellow moved down. So these little green candles on the 1 minute showed us a little sign of what was to come. So over here, right, you can see this candle has this CVD, but these 3 candles actually have a lower CVD. So higher lows on price. This is 1 minute scalping stuff. Lower on the CVD. That's a bullish CVD divergence. And well, we move to the upside. Nice. Nice. No continuation really, right? We're still ranging here for quite a long time now. And what is interesting about CVD at the moment is I'm not sure how confusing this is for people like reading the CVDs. What to do if wave counts are not clear? Best to wait and don't go into lower time frames, but go up in time frame. Go to the higher time frame, not the lower time frame, because that's a trap. Many people want to go down into lower time frames to try and get clarity there, but often it only makes you more confused. But at the moment, you can see that this high, the green, oh, you can't see it over here. So the green high, the green candle has this pivot of yellow CVD. But you can see that the horizontal yellow line is still above it. So at the moment, from a CVD perspective, I'm actually quite neutral. There's not too much happening. What's here? We do have bearish, little bit of bearish CVD here. Lower high on price, higher high on blue. So yeah, we have to be patient. We have to be patient. But that's the CVD story of what happened here, as well as the Elliott Wave story of what's happening here locally, right? So you got that. Now, if price moves to the upside, this volume profile is interesting. So it's almost the same as the channel, but of course the point of control is always interesting. If you manage to get inside the value area low, maybe with a test, point of control would be target 1 usually, all the way at the high. The channel is simply trade the range until it breaks. If we do move down in the upcoming 2 hours and 23 minutes, this is my first area of support, 26.2, 26.3. So that are yeah, well, that's what happened basically here locally. And as you can see, we're now below the channel, right? By the way, we're still ranging below the channel here. So let's see what happens. But yeah, that's my explanation of the waves locally and how you can use volume, including Elliott Wave knowledge, right, to get probabilities as well as trades, using some CVD knowledge as well. There you go. So we will go into higher time frames, but let's have a look at what you have been riding. Lady Biddy. Evening Legends. What's up, Mark? How are you doing? There he is again. Mike Freeman, sir. Epic Entertainment. You are cute. Thank you. Christian M. Hit the like. Thank Christian. Abdul Karam Abudanji. What's the day? Oh yeah, I answered that question. Oh yes. Hello. Oh yes. What's up? How are you doing? Van Huyn. Could you talk more about the relationship between Elliott Wave and volume? Yes. I can. Let me remove the support here. Keep the chart, like keep this on because it's interesting. Okay, how are we gonna approach this now? So keeping things simple. Let's start with an impulse. I'm not going to like go over everything because that's a whole like session by itself, but okay. This is your impulse, right? What are you going to be looking for? Usually wave 1 is quite weak. If wave 1 is a diagonal structure, you want volume to move to the downside. If wave 1 is a regular impulse, it will be the same as what I'm going to explain. So 1, it's like some people are not yet sure if we go and pump, right? This is the like usually a wave that's relatively weak. Wave 2 should have then like usually lower volume. So you have like this. Let me draw the pattern by the way, basically. So we have a bit to the upside, a little bit down. And then eventually we have a wave 3, right? Actually, that's 1, 2. And then in a wave 3, you have a big push in 3. Then comes wave 5 of 3, which is a little bit lower. Then you have 4. Right, and then you have 5, and 5 will have lower volume. Ta-da. And then this is the high of your 3, so you have lower volume here. I could actually just do that. Okay, so in a regular impulse, your wave 3 should have the highest volume. It's usually the strongest, most impulsive wave of a impulse, right? Each impulse by itself has 5 waves, right? So this is where again a wave 1. So in an impulsive structure, this is your 1, 2, 3, 4, 5, right? On a higher degree. Okay. Or it can be an A or a C, but in an impulsive structure, it's a 1, right? So you have 1, 2, 3, 4, 5. Wave 3 usually again is the strongest, biggest impulsive structure. So usually most volume, by far most commonly, is in a wave 3. If you get a big push and you get high volume, what you are usually looking for is another 4 and another 5 and then a 5 on lower volume, right? That is by far most common. So that is automatically what you're going to be looking for. You're going to be looking for a wave 4 on decreasing volume, and then you want to see a wave 5, so a new high on lower volume. Wave 4 max target, this is what I just explained. The max target for a 4 is the 0.5. If you start closing candles here and hitting the golden pocket and stuff, probabilities go down. It's a wave 4. But instead, we're going to be looking for a 3-wave structure, either WXY, ABC. Because now, if this move to the upside ended on high volume, we want to see a 4-5. But if wave 4 targets get invalidated, and this is the highest volume move, we're going to look at this being a corrective structure, meaning probabilities are higher for at least a bit of a dip. And then it depends if this is an ABC and a W, that you get a WXY, or this is an ABC or whatnot, or a WXY itself, and you're going to be looking for lower prices. But by all means, if 4 gets invalidated, you will always look for lower prices, either directly down, or you're going to go down and up and then a WXY and then go back down, right? So it provides insight of what's to come. So that is how you then use fibs with the volume, right? So this is then a regular impulsive structure. This is the normal impulse, right? Because you can also have an impulse that is an extended fifth. So then wave 1 and 3 are quite similar, but now wave 5 is extended. So you have a 1, 2, 3, 4, 5. By the way, wave 3 is never allowed to be the shortest wave. So let's do a little bit like this. So now wave 1 and 3 are quite similar in length. 1, 2, 3, 4, extended fifth. Again, same rules apply though. 1 and 4 are not allowed to overlap in an impulse, okay? They're not allowed to overlap. Else you got to think about diagonals, and in a diagonal, you want to see volume decreasing, right? That brings me, by the way, before I finish this is very important and very useful for you lot. This is very, 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 very useful. Oh, not too steep. Don't go too crazy, Koen. Okay, so there we go. Okay. Importante. So, if this is the structure we're looking at, do you now know if this is a diagonal or a triple 1, 2? It's difficult, right? Because we need volume as well. So in a diagonal, leading diagonal, that is, right? In a leading diagonal as well as ending, but in this case, I draw a leading one. We want to see volume moving down, right? That's what we're looking for, volume moving to the downside. If you see a diagonal pattern, but the volume is not really nicely going down, but instead it's like it's peaking, going down, but it's peaking again and going down. And like it's like almost straight, like it's almost like volume doing this, just a straight line, maybe even having volume that up, down, a bit higher and this. Please keep in mind that this can be a 1, 2, 1, 2, 1, 2, and you pump. So it's not a 1, 2, and then you go up, but it's a triple 1, 2, and you pump. And if we then add CVD divergences in the mix, what you want to see is divergences between the the first low and the second low. Higher low in price, lower low on the CVD, and preferably even over here between this low and this low. So you build higher lows, you build CVD divergences, bullish ones, and you have the volume being either flatlined or showing a bit of an irregular pattern, not necessarily volume going down like this. Think of a 1, 2, triple 1, 2 as well. Okay, now we go back to the extended fifth impulse. So in an extended fifth, over here, 1, 2, 3, 4, 5, no overlap between 1 and 4, right? In this case, wave 5 usually, most commonly, has the highest amount of volume. Now, wave 5 being extended is rare. It's not common. Doesn't happen too often. But it's good to know that a wave 5 then usually has the highest amount of volume. But even then inside this wave 5, you want to be able to count a 1, 2, 3, 4, 5, where inside that wave 5, most commonly, again, wave 3 has the highest volume. So inside 5, you're then still looking for another 4, another 5, higher low or a higher high, but a lower high on volume, right? And it's the same when the wave 1 is the extended wave. Okay. Now in an ABC structure, like a 3-waver, like this, wave C can extend to the 1.618 and can also have more volume than a wave A. But as explained earlier, it's about the drop. If then you get a drop that's below the 0.5 fib, taken from the low of 2 to the high of 3, then we can think about an ABC here, right? As long as this moves above the 0.5, we're not sure. And then, of course, you have like all the corrective structures, WXYs, but WXYs depend on their sub-degree pattern. So a W can be a zigzag, which means, you know, wave C can have higher volume, lower volume than A. That's, you know, can go both ways. X can be a flat, where in a flat wave C, you expect the highest volume because that's an impulse. And then wave Y can also be a flat or a triangle. Now, important about a triangle, if you have a triangle scenario, A, B, C, D, E, and then eventually you move down again, right? Also in a triangle, by far most common and preferred, volume moving down. People get bored. It's ranging, takes a long time. People get bored, volume going down, and then eventually you get the move. It can happen that wave E overshoots the AC trend line, so you get this and then down. And it can happen that wave E then increases a bit in volume as well. Why? Because you have the breakout traders as well, right? You break the trend line, people enter their positions thinking like, yo, we go to the moon, and instead it goes down to hell, right? So be aware of those fake outs with triangles. I love looking for fake outs in triangles when everyone draws the trend lines. Because there's a lot of rules that come with a triangle, but this is only volume, okay? So yeah, we have diagonals, impulses, WXYs as explained, zigzags. Well, there you go. Basically, that's that in a nutshell, I suppose. Good question. I like your question because people learn something, right? So hopefully people learn something from this information. That's a very good question. And yeah, props to you. Oh, when you open the chart on the 5-minute, there's no more data. I do have data here, so it might be on your end. Yeah, higher time frame. We'll get there. Hello, sir. I'll go there now. Hello, sir. Is it possible for wave B of a zigzag to unfold in an expanding flat correction if wave A has already unfolded to a leading diagonal? I mean, wave B, yes. Wave B in a zigzag can be an expanding flat. So then you have a wave A, right? This is your wave A. And then, so 1, 2, 3, 4, 5. This is your A. And then your wave B is going to be a 3, 3, 5. The high of A is your invalidation. The starting point of A is your invalidation. So then you have this as an A. This here is your B. And then you're looking for a C to the downside, continuation. So wave B can absolutely be a flat in a zigzag. Yes, wave B can be any corrective structure. Timo Romein, daar is hij dan. Hij is er weer. Hallo, hallo. Goedenavond. Exactly. Yo, what's good? Gator J is back, just like yesterday. What to do if wave counts are not clear? I answered this question, but just for repetition, if there's new people, go up in time frame. Don't go down. You know, it's like I used to be there. You go down, down, down on time frame, trying to figure out what's happening on the lower time frame, so that you know what happened. You'll just spend a lot of time on very, very low time frames, which probably will make you more confusing. Best thing to do is to be patient, sit back, go to the higher time frame instead, try to figure out what's happening on the higher time frame, and then just wait for price to show you what it wants to do locally. Because usually if you then get a move, then you get more clarity again, right? So currently, based on the information we have, right, if price breaks the 05 here, which is literally right here, so if price moves down, triggers the 05 here, well, probabilities are very high that we will still see lower prices than these lows here, because then we're going to be looking for this to be a three-wave structure, and then either we do this, like we still move up, right, and then down, or we go straight down. Doesn't matter. Probabilities simply increase to take the lows here, and that is what's important. And as mentioned, we do have a little bit of bearish CVD here, lower high on price, higher high here on blue, but it's very rangy already, and we have 2 hours and 9 minutes left for a move, in my opinion, based on the New York market that is still open. So if price wants to move, as it stands now, we are not finding an entry into the channel, right? We're getting rejected, so that would be a minimum, right? As a bare minimum, you want to see price enter the channel again. So this order block was support. You could say the order block is acting as resistance, but simply a trend line, right? Kind of like a channel. So over here and over here, we're not in the channel. So we're actually being rejected at the moment. Feels bad, man. Or not. Depends. I'm being rejected. It's like, if you get rejected in real life, that's a feel bad. Looks like it will break to the downside. Yeah, I mean, the probabilities, of course, are still there. There's always the probabilities. But if, like, for the, like, more locally, as mentioned at the beginning here, it doesn't look like an impulse. It looks more corrective, which means that I'd be looking for some sort of a range to form over here over the weekend. And that's why my channel is interesting as well here. But you want to see X's in the, like, you want to see price, of course, going back in the channel then. Hasta la vista, Barbie. Which is the best book for learning Elliott Waves after the Elliott Wave Principles by Prechter? I don't know, because it's the only one I have. If you want to go to Discord, you can actually, not that one, this is the chart of someone from Friday Feedback, don't worry. He counted this, which is a very interesting, nice count, by the way. Pistachio, Will88, if you're here, props to you. But yeah, this is very interesting. It's in Discord, and I actually have to post this because it's a bit hidden. Not on purpose, but it's because I had a conversation with Jay-Z. Jay-Z, and we were talking about flats and flats. How can I gotta find those messages, but wait, maybe, can I look for documents or something that he shared something? Oh, yeah. Oh, of course you get all the pictures. Because he shared this. Oh, here. There we go. Let me post this over here for all of you in Discord, in the general chat. Okay, guys? So if you're in Discord, just click on this message. And then it is the statistics, and so it's a secret one, which is this one. And I haven't read it yet myself, but yeah, you can. There's even more info about Elliott Waves here. So yeah, make sure to check that one out if you're interested, right? Do you see yourself as a full-time trader in the years to come? I mean, in some way, I guess I already am, but I just really love doing my other business stuff. So I have a strategy and a plan that allows me to also do my other stuff that I love doing. So I trade, you know, can I live from trading? Yeah, I can live from trading, but do I want to live only from trading? I mean, that's boring because I get about 8 to 20 setups a month. Of course, maybe because I do other business, I might miss a setup. Well, I don't mind, right? I still trade the setups if they come. But I really enjoy being a global keynote speaker. And if the people don't know, you can just, you can find my stuff online anyway. So I really, really enjoy being a global keynote speaker, being a board member of the Global Esports Federation, having an educational business as well. So I really enjoy doing other stuff besides trading because, I have the time. I make a video in the morning, 7 a.m. if I can, at 1 p.m. and usually also at 7 p.m. But during the day, I have like 5 hours in the morning, 5 hours in the afternoon where I can do other stuff. Of course, I'm in Discord as well throughout the day, but I can spend my time with other things. And also, of course, I can also do a morning video and an evening video, so 2 updates in the day, and then I have the whole day for other things while I still upload videos twice on that day on YouTube, which is still a nice amount. Now, most of the time you'll see me upload 3 videos, but I like to do other stuff because I think else, I guess trading, some people make it very exciting, which I guess it is if you're scalping very low time frames or you go 100x in positions. But actually trading can be pretty boring once you have a strategy, once your psychology gets to a certain level, you just execute. Yes, you might lose. Yes, you might win. But hopefully, bottom line, after 100 trades, you win more than you lose, right? That's the plan. But after you execute, you have to manage the trade. But because my plan is, I'm not a scalper, so I don't take 10 trades a day. I take 8 to 10 a month, 8 to 20 setups a month, more as a day trader. I'm a day trader, dude. So yeah, that sometimes means that some days I don't even trade, which means I can spend more time on YouTube or think of other programs like the Diamond program that will probably come next week, Diamond membership. So I think next week. That could be cool. So planning at least for early next week. Crowd performance. In my opinion, a 112 is a unicorn. Yep. I've never seen one on the chart. Well, there was one at like 60K, the range before the all-time high. So the range we got, right? We build a range before. I can't because it was low. I do low time frame stuff, so I don't like. I can't see it anymore. Up. Yeah, it was here. In this range. And then here, locally, you had price building, like poof, 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 and then bam. And then after that was finished, we went down again. This was like I counted this as an anomaly, this move down, because it did like from any wave structure, this like it just didn't really make any sense. That was a crazy move. By the way, guys, talking about crazy stuff, do you remember, for the OGs here, do you remember so guys, I don't trade fundamentals and stuff. Who knows what was going on here? Come on, for the OGs, you have to know. What was the news? So I don't follow news. I don't believe in I don't believe. I mean, I shouldn't say necessarily I don't believe. I'm 100% technical. I don't follow news. I don't care what people say. like some famous people. But for the people in chat, what happened here? You should know. Yeah, Bogdan. Yeah, that was the Elon Musk moment. Yeah, exactly. It went up, went down, and then we continued. It was funny. From an Elliott Wave point of view, guys, it's just a 1-2, right? Keep it boring. It's the same as with... it's the same as the COVID dump low. You know, people call it the COVID dump low. I call it a very, very nice wave too. Oh boy. COVID. Closes inside the golden pocket. I mean, holy moly. Yeah. However, read Market Wizards, the books, and you will see that any strategy, whatever it is, can be very, very profitable. I really respect fundamental traders because staying up to date with all the news, all the stuff, it must be incredibly tiring. But if they make it work, they make it work. Technical traders, if they make it work, they make it work. And we should be proud on other people making it work, whatever their strategy is. Psychology theory still valid? Absolutely. How do you get CVD chart to be on top of price in TradingView? I don't know. I don't use CVD on TradingView. I only use it on AGGR, which is this chart. Maybe the bearish... we have some... not here, bearish CVD. But we might just drop and finish these bearish CVDs. Target is this low here. There we go. We are below the channel. So far, we are not managing to get back in. We have a bit of a wick. Maybe we fill it. It will be interesting to see how eventually this is gonna fold or gonna play out. So, but yeah, currently, what you don't really want to see is go below this box, and it's all like if it goes down again here, you know. Probably we just... Now from an Elliott Wave, so from a CVD perspective, it makes sense, right? We actually now, the CVD now played out. That's also why I like to use CVD with Elliott Waves. So it can give you a hint of what price might do, which, you know, can lead to certain scenarios. So over here, little bearish CVD now played out. Also, by the way, I actually forgot to say this. Very locally here, if you would go to the 1 minute, you can see this is also a 3-wave move. Again, volume in the high, corrective structure. If this is like the fact that it is a 3-wave move gives you 2 possibilities. One, this 3-wave structure is gonna lead us into a bigger range so that this is just a 3-wave structure and you continue ranging. Second scenario, you go down. So this, the fact that price moved below the 0.5 locally, taken from the low of 2 to the high of 3, moved below the 0.5, invalidates an impulsive structure to the upside for higher prices, increases the probability to either continue ranging or you go down. That is the probability. And that is why I like to keep an eye on CVD divergences over here as well. Because if you start to see bullish CVD divergences, you get more trust in continuing to range. But if you see bearish CVDs forming, you get a higher probability of price at least having the bearish CVD divergences play out, which it has done now because it grabbed these lows, if not potentially continue, right? But that's the question. That's the question. Now, if it continues, it's the way it is. Is this a nice impulsive structure or diagonal? No. But that's why I also like to use CVD divergences in confluence with Elliott Waves to give a better, get a better idea. So let's see what price does here, no? What do we have? The bearish CVD divergences here now played out, so these are now neutralized. Now we're not even close to the low here, so there's definitely no bullish CVD divergences with this low, which means that for CVD divergences, for the bulls, what you want to see is a bounce, bit of a range, bit of retracement, higher low in price, lower low in CVD. Now, that's what you're going to be looking for like from the bullish perspective. Now, if we do get a big move, 1 hour and 56 minutes left. Will you get me out at volume S? I don't know what you mean here, Alvin. I'm very interested in CVD. What's the difference between the absorption and the other one? Exhaustion. You can make sure, like, well, it kind of... So absorption can be traded, exhaustion cannot be traded. That's my opinion. Because with exhaustion, you can just, like, it can continue to pump and continue while CVD is showing exhaustion. So while you have while you're pumping, CVD goes down. First, let's talk absorption. Absorption is lower high on price, higher high on the CVD. And just for, is it this one? No. Is it that one? No. For absolute clarity, I really recommend people that want to try CVD to download this. So here, absorption tradable, exhaustion not tradable. That's, I mean, no financial advice, but that's how I do it. So, and it's also, there's of course theory behind it, because with exhaustion, the problem is it can just continue. Like lower low on price, higher low on CVD. People think maybe exhaustion because there's less market sellers involved, right? Because CVD shows market sells, market buys. So if you have a lower low but a higher low in CVD, what it shows you is that even though price made a lower low, it did so on less sellers. However, because of limit orders, which you cannot see in CVD, because CVD is market orders, not limits, because of limits, downwards pressure and absorption, you might not see that price is like that there's absorption going on and price just keeps going down, and you'll be trying to trade exhaustion all the time. But believe me from experience that exhaustion is much more difficult to trade than absorption, which is absorption, higher low in price, lower low in CVD, meaning there's more people selling at the second low than the first one. However, there's a higher low, even though there's more people selling. So someone's absorbing the market longs over here, or market shorts. They're absorbing market shorts with a limit long, right? That's the difference. Exhaustion has to do with a lack of market sellers or market buyers, while with absorption, there is many market sellers or market buyers, but there's a bigger limit order absorbing them. However, with exhaustion, what you cannot see is the limit order. But with absorption, you get a better idea of where the limit order is. So exhaustion, not tradable, higher risk. I mean, if you want to trade it, you trade it. That's up to your strategy, of course, and your plan. But, you know, that's, I think, a very important distinction between the two. And, I think they arrived by train now. So I gotta go in literally 2 seconds because they now walk home and they'll be here in literally a few minutes. Smash the comments. Thanks, Mike Romero. Tesla pump. Tesla. Absolutely great stuff. Thank you. Around the time I started trading. Yeah, me just like a few months before in January, Feb. Nostalgic. Yep. Rule of neutrality. There's no rule of neutrality in Elliott Wave. There's a rule of alternation, where if wave 2 is more commonly deep, short in time, and deep, short in time, and shit, what's the third one? It's deep, short, simple. So a zigzag for like a wave 2 tends to be simple, short in time, and a deep retracement. Wave 4 most commonly is a more simple retrace, or is a shallow retracement, complex and long. So if wave 2 is short, deep, and simple, wave 4 tends to be complex, long and shallow, man, or the other way around as well. So if wave 2 is the other way around, then wave 4. So it's the difference between the waves, right? And then, yeah, well, seems like the bearish CVDs here are going to play out more locally, and we're going to drop. We never found our way in the channel, based, of course, on Elliott waves here. There's not really that high of a probability. It's like an impulsive wave, right, that we see to the downside. So that could potentially lead to something like this. But, you know, take it step by step. The first support, if it really goes down, would be for me be here 26.2, 26.3. That's the first area for me that I would be looking for myself. Thank you, Van Hoen. 3 lives in a row. Yeah, yesterday too. Yeah, I mean, like usually it's wave 2s or Bs or X. Yeah. Okay, everyone. So you know what I'm looking for. I have to go because our international guests from America are arriving. It's going to be a busy weekend. Please don't expect too much from me because we will have those guests from America here for the weekend. I'm not sure how much content I can make, and you know, I have my birthday party tomorrow. Sunday is going to be Amsterdam with them. So yeah. Please take it easy on me, right? But I'll try to be there whenever I can. Let's see what happens over here because, yeah, still this, you know, Elliott wave wise, this does not look like a leading diagonal or an impulse, which would increase probabilities for at least coming back here. But bearish divergences here, bearish divergences here. If price moves down below this box again and takes this low, honestly, I'll be looking for probably here if you not swing failure pattern it. So, and this move to the upside, as explained, looks like a 3-wave structure or is a 3-wave structure because a potential 4 retrace too deep. So there's only 2 options. You go horizontal or you go down. Now, I explained all that stuff for the people joining later. Make sure to go back in the stream. For now, though, I like to thank you guys for watching. Ooh, the screen, it's because I didn't put the other lights on. But thanks for watching and trade safe before the weekend. And yeah, I'll see you guys the next time, right? Whenever that is. Bye-bye.